Okay, so we're back. Hope everybody's been doing okay. Yeah, we took a little time from videos. One thing that I want to continue to stress to you guys is, as you guys are going upon your investment journey, it's very important to not get analysis paralysis. And so, the concept of always feeling like you have to be, finding the next thing, or the concept of feeling like you always got to get the latest alpha, or you got to do this research on that ecosystem and hear about this funding rate and hear about these latest news articles. And at the end of the day, a lot of that gets in the way of what the main objective is. If you guys remember, a couple core principles of investing is to grow the size of your portfolio in terms of the amount of money that you're able to get into the market, right? I'm always saying get money into the market, get money into the market, get money into the market. So especially, through the last time that we've had, here over the last couple months, we've had a little bit of a sideways action to downwards action for some of these other coins. But, the last message that I put for you guys, when was that? Was late May. So just about 2 months ago, we were talking about how Bitcoin is clearly leading the show. It was breaking into all-time highs at the time, and it was going to do that. And I said, here within the next 90 days, expect some rotation, some other sectors starting to pop off. And so we've now seen that. We've seen Ethereum making an incredible comeback. This thing legitimately was under $2,000, not even 60 days ago. So the beautiful part of crypto is, when you're positioned right, it moves fast. And once again, if you guys remember anything from the compound interest videos, the way that you compound, there's a couple key factors. It's your growth rate. That's very important. It's going to also be the amount of times you invest, right? So once again, how much liquidity can you get into the market? And then time, right? How long can you let it bake in the oven? So with that being said, we've had some great opportunities for DCAs, which if we use the tools that we have, well, we can clearly see that now we start to see a little bit more uprising within the altcoin market. And so now is a little bit more of applicable of a time to then start maybe diving into some charts, assessing where we're at, seeing some of the trajectory. I'm not going to pull up the M2 and overlay it with a 90-day offset and say, hey, here's where we're going. This is really just to get a temperature check and see how hot are we within this budding potential alt season. And once again, it's about being positioned before the alt rip, right? So that's why we should have hopefully been investing over the last 2-3 months into our prospective positions. But anyways, without the whole narrative in the beginning, let me actually just start to get into some of this information, things that I've been kind of looking over especially the past month or so, and assessing kind of the temperature of what's going on here. So, and we'll talk about some of the new things that have kind of come into play within the traditional markets, coming into some of these ETF funds and some of these additional treasury type companies going on chain on other coins outside of Bitcoin. That strategy seems to be starting to take place in ecosystems like Ethereum, Solana, etc. So we'll probably touch that a little bit towards the end. Now, if we just look at this basic dashboard, we have Glassnode up. We can kind of see, well, where's everybody at, right? So what I really like to look at, obviously, is price. So Bitcoin currently at the time is 117,000. It recently was 123. It's kind of came down from that, but during that time of Bitcoin going from 123 to 117, we've seen other coins like Ethereum, XRP, really as of today, Solana, really starting to get some of that rotation of the money. Now, the way that money comes in, like once again, we'll talk about like who is that money from? Is it from retail? Is it from TradFi only? Is it everyone? I personally don't think that everyone is in this market yet. Retail is not here in droves. There's a lot of supporting data that I'll show you guys today that'll show that. But once again, we have the budding of a nice momentum type move. But the key thing is, hey, can we sustain it? That's going to be the thing. Obviously, a lot of people are looking at Bitcoin dominance and seeing that has a material downturn. But once again, We need to see something that's going to be longer than a month and a half. If we start to see, 2 to 3 months of continuing of, the compression on the Bitcoin dominance, Ethereum dominance rising at the same time, then that's when we can really start to say, okay, things are starting to heat up, on a higher temp, right? So, but as of right now, things are getting kind of warm. So, with that being said, let's I think really let's first and foremost jump into this middle category. So supply and profit. And this is one of the things to let you know, like, hey, is everything at all-time highs pumping? Is everybody making money? And so, like, one of the things, if you're like ever looking at this dashboard here, if you find yourself feeling incredibly happy, if you find yourself feeling in full belief, or AKA euphoria, and you see all of these like 99%, 98%, 100%, right? Especially everything really in the top, 20, 30, which, things are looking pretty decent. That's letting you know essentially that everything is in all-time highs. And that is letting you know that we are in the euphoric stage, the later stage of what we call an altcoin season, or a completed bull run. So we have 94% for Bitcoin, obviously, because we've come off that top a little bit. Ethereum, believe it or not, there is 97% of people holding Ethereum that's in profit, even if they're in profit $1. Price is at, I believe, 3,700 and some change. Ethereum is, poised to continue. XRP, the one that came back from the dead, obviously 99%. BNB, steady Eddie, 100% in profit. Everybody, all-time highs. Okay, so Solana still haven't pumped yet, but Solana today is starting to make its move. I kind of see a little bit more momentum coming to Solana here over the next week or so, depending if hopefully macro has no major issues. But yeah, we have meme coins that are also a little bit of ways away. 87% of people are in profit. Cardano, don't know why they don't have the information there, but Cardano, I'll probably say, is in the higher 90th percentile with the pump that it's had recently as well. Sui, once again, probably here if we want to try to estimate it, but once again, it's probably going to be somewhere along the lines of where Solana is. So what we're seeing here is, like I said, a warm market. So from here, let's actually segue and jump a little bit more onto really checking out Ethereum and where it's at, because typically if we always talk about rotation, so capital rotations going to Bitcoin, then that stalls out for a little bit. Then Ethereum is kind of holding the beer, and after people make quite a bit of money, or they have significant gains in Ethereum, then they'll go a little bit more risk on the curve into smaller things, within DeFi, even all the way down to NFTs being like one of the most risky things here. So with that being said, Ethereum, we need to have a good barometer on it. And so one thing that we can first and foremost look at is the realized price and the NVRV. So the NVRV ratio is something that's pretty helpful through time. It's kind of like the over under, right? Especially if you're under the realized price. But a little bit of information just really quickly for those that are kind of rehashing this information and trying to remember what this stuff is. The NVRV ratio is the ratio between market value and the realized value, so allowing a visualization of Ethereum's market cycles and profitability. So essentially it's just saying, okay, like, typically are people at their cost basis on average? Are they holding at a 1x or 2x on their cost basis? So value of 2 means the current price is 2 times the market average cost basis. So if we ever see 2 on this metric, so as we can see, we've typically spent majority of this cycle above the realized price. So once again, that leans into why so many people are in profit. We had some gifts, really 1, 2, and then recently here in April, which was a screaming. Like, you could have bought Ethereum, you could have bought really anything, and you would be still in significant profit at this point in time, for the most part of whatever you would have bought. But that was a huge gift. But in terms of Ethereum, seeing the fact that if we kind of start to trickle up, we're looking for the distance away from this blue line here. That's the key thing. So if we kind of come all the way to the top, see if I can grab that. So let's see if it's going to give me some information. So we're at zero point 0.5, that's pretty good. Is it by means the farthest deviation from the line? No, I'd say probably, here in these areas where we're seeing, areas of like where the metric reads 4, you see the metric reads 2.6 there. So yeah, we are at 0.5, guys. So this is not like a sense of extreme overheat. The fact that we're already back here at pretty much the $4,000 range where we were struggling previously back in 2024 in March, and then we had another opportunity here towards the end of last year in 2024, but we still didn't eclipse that seems to be increasing resistance there. We're already back there at that price point, but yet here on this metric, once again, we're only at 0.5. And so that leans into, once again, saying that euphoric period of just everybody being well above their cost basis just is not the case. So that's actually a really good sign to let you know that, there's some more meat on the bone for your portfolio to grow some more here in the future. So that's a good one to kind of start off with. If we want to continue down, one of my other favorites is looking at these extreme values within the NVRV ratio. And so this kind of just adds a little bit of color to what we were just talking about. And, color being saying, hey, if we're getting high or extremely high, so NVRV has been above 2.4 and for around 20% of the trading days. So that's 20% of Ethereum's life has it spent that much time higher than the average cost basis, and only 6% of the time has it spent we're talking about above 2.4 on the NVRV ratio. So that is a small window of time. So what this is now doing is adding time to the analysis, which is key, not just looking at price. So as you can kind of see, if we ever catch it where it's in that deep red, that's letting you know like these are the really frothy periods of, especially for Ethereum, where we find that there's overwhelmingly a lot of people that are well in their profits. And so we had that reading here just gently back here in 2021 last cycle. So we haven't even hit orange at all this cycle. So, who knows? We may not even hit the deep red, but even an elongated period of time, right? Let's say if we catch a month or two of, once again, people growing their profit, off of their cost basis, that's letting you know, okay, the market is getting hotter, which means your bags are gonna get, nicer too. So if you're like the person saying like, hey, am I adding at too high of a price? Believe it or not, based on you just don't want to find yourself investing at the tips, the hot points in the market, right? Especially for these major, type coins. We're talking about the majors of Bitcoin, Ethereum, Solana, stuff like that. So the key is there's going to be momentum, and you don't want to find yourself towards the back end of that momentum of the move for these assets in particular, because of how volatile they are. As high as they can go up, they can extremely as well crash down another 30, 40, 50%. So you don't want to be caught there. So if you're asking the question of like, hey, is there still room for me to kind of fit some more liquidity in to my portfolio? Let me try to add a couple more DCAs. Believe it or not, no, we haven't even broken the $4,000 range, and we haven't even popped in the deep orange here. So, and if you have your rules and set in stone, live by them, right? If you're like, no, I'm good. No, I'm just going to enjoy the ride. Do what's comfortable for you. But I'm just trying to give you an idea of where risk is for new capital coming in. I would say it's at like a 4 versus it being at like a 9 or a 10. So now it's not a 1, obviously. A 1 obviously would be down here where we had the $1,500 Ethereum, or what is that? Yeah, $1,900 Ethereum. That would definitely be a 1. So, we have those opportunities, and when they come, just take advantage of them. So we have that there. Okay. And then another cool one is, if we want to kind of get these deviation price bands, once again, still using the NVRV, we can pull that up. And so we can kind of put like a target trajectory, so to speak, based upon some of these things. So the mean is going to be something that's kind of pivotal. So if we're gonna look at this, right, is this gonna be this chart presents price bands derived from the NVRV ratio based on the degree of the deviation from all-time mean. So upper and lower bands are computed from levels representing, plus or minus zero point 0.5 to 1 standard deviation. So on the sigma. Really here the key thing to look at is the mean first and foremost. And you ask yourself, and I would always say this, is like, hey, when I'm investing and I've got data for an asset for at least 2 to 3 years, what is the mean? Because the mean is different than the average. I mean, look, go look that up. Use ChatGPT if you don't remember that from grade school. But the mean is a different number than you'll get from the average. Typically, the mean is going to be higher. It's going to be, hey, what is going to be the number directly in the middle from the top price to the lowest price. But regardless of that, we're able to track that through time, and so we can kind of get some of these bands. And same thing, we have that top band between between orange and red. We're looking at $4,000 to $5,000 Ethereum, and the key thing is even though it may tap into red, that's not saying that it can't continue to be on top of red. Those, I guess you can say though, that +1 on the standard deviation for a considerable amount of time. Like it got top of red back when Ethereum was just $640. And then, as we all know, that was in 2020, and it continued to rally all the way up to 4,000 some change. So, don't say, hey, this is the top for Ethereum at 5,000. We clearly can see that there is more room for higher prices, with the conditions hopefully improving within the macro. But us being here towards the later portions of the cycle, the last 6 to 8 months, regardless of whatever it may be. But with that being said, just kind of give you the data once again on risk. We're like, and I say, 4. You want to maybe put it at a 5 because we're just kind of crossing the mean price, which the mean price was just right there about like $3,200 for Ethereum. So, okay, so cool. We could look at a little bit of funding rates, but before we do that, let's look at this here. So this one is going to give us more of a momentum type read. Hey, is Ethereum trickling up? Is it trickling down? And how strong is this move, right? So we've seen incredible bear markets, right? So incredible bear markets for Ethereum where we stay on the momentum, where we have negative momentum for months at a time, and we've kind of had situations where we're in a completely declared bull, right, where we have months at a time where the momentum is going to the upside. Where we find ourselves in this cycle is we've had the bear market, then we have a period of time where there's nice momentum, slows down, and a little bit of a drainage of liquidity. Then we have another spark, then a little bit of drain. So it's a little bit of back and forth here. So what I can say is, when we do step into momentum, and especially if we start to have like a strong momentum, this increase of momentum, like normally it's been like a gradual buildup of momentum this cycle, gradual buildup. This one was out the gate, just right here. So we're at the positive momentum of like 0.5, which we've gotten there previously when we got to $4,000 prior, back here in March of 2024. But it's just kind of one of those things, like when you get that quick of momentum, it's nice to hopefully sustain it. So once again, we're heating up, and typically once you start momentum, you'll see it carry through for, maybe a month, 2 months. Who knows? If it's something of a real Altseason and bull run, it may be for 4 months at a time. So we just got to keep monitoring that. If we start to see this momentum slow down, start to trickle more down towards 0.2, or go flatline here at 0, or go negative, obviously, we're not in a full alt season, because you'll have a sustained momentum. That's going to be one of the key indicators to kind of look at for 3-4 months at a time, give or take. Okay, cool. So there's some basics on just some of the on-chain data specifically for Ethereum. I know we talked about Bitcoin a lot, but Ethereum, once again, in this rotational liquidity, is now coming more into play. Now, we probably should look at the chart. So here's the chart for Ethereum. Here I have it on the weekly chart. Now, the thing is, I'm trying to kind of really pay more specific attention to, I guess you can say, like I said, the momentum and how powerful is the move, right? Because that's what really starts to eye pop. Like when people are looking at the crypto market, and let's say they check, they check a price of something, and then 2 weeks later, it's just like way higher. Like that's where people get that feeling of FOMO, which leads into euphoria once they jump on the train. And so, I really like to see like obviously the volumes, but this candle here was probably, believe it or not, more exciting because this was like, we'll see. Like from Ethereum going from the close right there at what is it, about $1,790, going all the way up to literally 2,500. This move here going, I don't know why, going from 3,000 to 3,800 was more exciting. Obviously, possibly because it is the fact that Ethereum is getting closer to its all-time high. Regardless of the fact is, this trend line was clearly broke after several weeks of just trying to struggle. We have 2 clear weeks of strong momentum. Today being, day 1 of the week. We'll see if week 3 looks the same to, finally break us off of this level here that we've been struggling, just right here at about $4,000. So we'll find out if it's gonna, follow how Bitcoin has decided to do things. It might take a week or two, but it's gonna make its way through to an all-time high. It's just a matter of time here. Okay. Now the key thing is just looking at the momentum. Same thing on the weekly chart. We've had periods of time where we've gotten up, on the RSI pretty high. This is last cycle where you start to see, the shade of green above the 70 mark on the RSI on the weekly chart. And the key thing is kind of pairing that with something else. So you want to pair that potentially like what we have the MACD telling us the same thing. Like we're getting warm. Obviously, like when we start to have sustained periods of time above 70, because we're right at 69.85, we have, let's say, 3 more additional weeks and we find ourselves at 75, 80, 85, stuff like that. And then, the risk turns it, because things can happen that fast. The risk can go from 4 or 5 to 7, 8. It's not uncommon to find yourself, potentially in a nice bullish move, especially for an asset like Ethereum or any volatile asset within crypto, to go from, 38 to potentially, 5,000 within 2 weeks, 3 weeks. So, and we'll see that, right? The key thing as well, if we want to kind of hone in here on the MACD, same thing. We're seeing that positive read of momentum with the bars increasing, and we'll look for a slowdown on momentum if we start to see these bars turn light green. But what's very, very impressive, and hopefully we can sustain it, we see those moving averages finally crossing the midline. So when we have those periods of time where the moving averages are crossing the midline, typically these are like some really, 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 really good moments. We've only had it really just one time, or I guess I can say 2 times, right? 2 times here where the moving averages, believe it or not, make it past that midline, right? Where we have both, not just the blue one, but also the blue and the orange, the slower moving average. And obviously this last major, move for Ethereum back in the last bull run. But, these periods of time are kind of what we're looking for, where we see that material growth, smooth, several weeks of increase, 148% move there. I want to say we're probably close to that already now. You had a 60% move there. And then off of this, incredible gift that we had in April, because everyone is afraid of tariffs, like, we're at 140% there. And so that's, it's about the move going from bottom to top. And, before we have a pullback, it would be nice to see us kind of dip into like the 85, who knows, maybe even higher 90 range on the weekly RSI. But if we do have that, yes, we'll there's a good chance, we'll be, there at all-time highs or making all-time highs for Ethereum. So Ethereum kind of being the poison case, something to really, really kind of hang your hat on as, once again, that capital rotation. Now, I'm going to make another video that talks about some really, really important ratios. And this one's kind of getting long in the tooth. I'm going to try to keep this less than 30 minutes. And we'll kind of talk about these other ratios. We'll talk about others versus BTC, or even others versus Ethereum. How is the other altcoins doing in, I guess you can say, appreciation versus Ethereum? That's something to look at. meme coins versus BTC. And another one that's a little bit more high level, which I'll explain in the next video. So, Ethereum looking pretty solid. Trajectory. I'm not really even gonna, get into trajectory too much, but same thing. If we just take this move here from top to bottom. Here's the fib level. So, and boom, I've already kind of had it nice in place. The 1.6 brings us to 5,818. And then so if we get there fast, so here, like for example, if we were to get there fast within a month, definitely there'll be a little bit of a drawback. Maybe a week or 2, 3 of a drawback if we get there fast. But if we take our time to get there, let's say 3 months to get there, okay, probably not too much of a heavy drawback in terms of percentage. And so we just got to just play it by ear and see how that goes. There's a good chance that, prices will just move up on us, right? So this is beautiful. Capital rotation. Really quickly, something that's pretty interesting is and we'll finish with this on this particular video. The concept of treasury companies have now trickled into not just people within TradFi as far as their conversations. I don't know if you guys ever watch CNBC or Bloomberg, but we have these people who have started to recognize possibly some of the value and some of the things that they can do since they have publicly traded companies and being able to raise equity and debt just to lever that up for them to go buy an asset that is possibly a little bit more sound than their own company. And so it's pretty interesting to see like these companies accumulating, specifically Ethereum. Like for the first time, Ethereum had a higher, which I'll have to find out where I can look at that. I wouldn't say it's on Glassnode, but Ethereum, I believe it was last week, had a higher amount of inflow into its ETFs than Bitcoin. And the asset is smaller. Like the asset is a third of the size. So that is very, very nice to see. Can we sustain that? We'll see. But we have Bitmine, Emerging Tech, SharpLink, Ethereum Foundation. Obviously, they should have a lot of Ethereum. But it's so funny. It's because what they're just figuring out, Richard Hart knew years ago about, hey, we need a whole bunch of Ethereum to hold on to. Now, is he going to deploy this into the post-chain ecosystem? Sell the ETH and just swap it, sell the ETH, right? Whatever the case is, and buy a whole bunch of post-chain and pump all the post-chain bags, maybe. Or is he going to lever that up slightly, a little bit? He could, but he's not a publicly traded company. So there's certain things that he can't do. Like he can't issue debt, convertible debt or anything like that. But like I said, it's just funniest when, a lot of times people are so discouraged on post-chain, which I get. But the vision was there, and then so it's really just down to the execution. We need a higher price for Ethereum, for post-chain to really be able to do some of the things I think of what Richard planned. And so, or else he wouldn't have collected this much ETH anyway, right? It's all part of what's supposed to happen. But we will see. We will see. So obviously that's, post-chain being well down the risk curve. That's probably going to go much later than, like ETH. But we still see Post starting to have a little bit of life, but it's been beaten up so much, man. Just like how Ethereum was beaten up, there not too long ago. But the key thing is, so there's billions of dollars that are now being accumulated. And so what they're doing, and I'll try to explain this as simple as possible. So think about what's happening. These companies are going OTC, like over the counter. Basically, they're not buying it spot. But a lot of times what they're doing is they're saying, hey, they're finding these players that just have a lot of ETH and say, hey, we will give you ETH or we'll give you share in our company. And let's say the 2 times NAV. So NAV is like the true intrinsic value of the stock. But if it's trading, like let's say 2 times NAV, they would get 2 times the amount, right? So essentially, let me make it make sense with numbers. Let's say I'm somebody that had $100,000 of ETH, and they're saying, hey, we'll give you 2 times NAV of equity in our stock, which essentially would be in value of about $200,000. So think about this. If you're this person that's got all this ETH in this situation, you're like, sure, I'll do that. You can have my $100,000 in ETH. I'll take that stock. Boom, I will sell that. And the thing is, you can just sell just 100,000 of it, essentially, take that back into ETH. But what you've done for yourself is you've created a new $100,000 of liquidity to play with. Now, some people might say, well, let me just go back and get my ETH. But then what you'll be surprised a lot of people will do is go down the risk curve. They'll get into some lower cap coins. They'll start getting back into the meme coins. They'll start getting back into the NFTs. And so that's, this is an interesting concept to kind of see. This is maybe possibly one of the things that's spurring the alt season, is because of essentially this strategy of these public companies now coming in saying, hey, we want your ETH. And we'll give you TradFi money, basically people that are overpaying for the equity stock to these people that, natively already had the ETH. So it's pretty interesting. Now, the thing is, I don't think Richard Hart would do anything like that, because it's like, nope, not going to move these coins, right? His name is on the line. But with that being said, yeah, like, they got to get the ETH from somewhere. And so they'll probably get some from exchanges, but they're going to hit up the OTC markets first, just like how they had to for Bitcoin. So we'll see the progression. Like, something to keep looking at is the ETF growth for Ethereum, but then also Solana. Last little tidbit, last little sauce I'm going to give you guys before the next video. So Solana has an ETF you can get here in the United States, and it already has staking in it. So the ticker is SSK. And a lot of people don't even know about this, but if you want a TradFi product that is off the back of Solana and it is included staking involved, with that being said, they're staking the Solana, right? Now, obviously, they'll custody for you, but you'll get the percentage gains. It's not doing half bad, right? So this is young stuff, right? So these, like Solana ETF actually really being a full thing, this is a young thing. But once again, it's opening up Solana to what? More TradFi money. And that's exactly what crypto needs if y'all want the prices to go up, and then for people to go down the risk curve. So this is the part of, how things look within a cycle, which, I'm excited, and I'm glad that we've already been positioned here to see some of these bags go up. I did a consultation with one of my clients, been, just a long-term client I've been working with since, really 2022. And it's like a beautiful thing to see him in six figures, somebody that legitimately, that's nowhere near where he put in. So it's a nice process. And I mean, literally since I did the consultation with him about like a week and a half ago, he probably added like another like $20,000 to his portfolio growth just from the events that we've experienced here recently. So, good times, but it's not always going to be, amazing. Like I said, if we're talking about temperature, heat, I think things are heating up. If we're just looking at just purely Ethereum, and we're going to get into the ratios in the next video, yeah, it's heating up 4, 5. But yeah, no, we're not finding ourselves at like the tip top of the alt season, and everybody's already made 20 and 30 X's. We're kind of just heating up. So, but we got to see if this can sustain, because we've had several failed pushes, for a so-called alt season. So what I want to see is a little bit more follow through, especially over the next 30 to 60 days, and that'll tell us a lot. So with that being said, hopefully y'all are positioned. Maybe get your last little DCA in here over the next week or so. But keep on doing what you're doing, making that money, and staying active on, paying attention to some of these recent videos that I'll be dropping here. So I'll catch y'all on the next one. Peace.